Are you worried that from 1st April 2026, owning 4 properties will attract 100% income tax? Are people telling you that the income tax department will send notices if you have multiple houses? Before you panic or make any financial decision, you must know the truth. Because this viral claim is creating confusion across the country. In this video, I will explain the actual legal provisions under income tax law, clarify whether there is any new rule, and tell you what really happens if you own more than 2 properties. Stay with me, because the reality is very different from what is being circulated. Welcome to my YouTube channel, Legal Information, Law Insights. I am Advocate Mukund Mahajan. Recently, a message is spreading rapidly on social media claiming that from 1st April 2026, if a person owns 4 properties, 100% income tax will be imposed or the income tax department will send notices. Due to this message, many people are confused and believe that the government has fixed a new limit on holding property. Therefore, in this video, we will carefully understand the actual provisions of income tax law. Before moving ahead, I have a humble request to you. You may scan the GPay QR code and contribute 59 rupees or 119 rupee to become a member of this channel. You may cancel the membership at any time. Your small support will help in spreading legal awareness. Now, let us move ahead to the topic. No provision for 100% tax. First of all, it must be clarified that there is no provision in the current law imposing 100% tax on owning 4 properties. Income tax law does not levy tax on ownership of property, rather, it levies tax on income arising from property. This principle falls under income from house property, which is a separate head of income. Tax on income, not ownership. According to Section 22 of the Income Tax Act, 1961, income derived from building or land appurtenant thereto is taxable. This means that tax is levied not on ownership of property but on income generated from it. Self-occupied property rule. Now an important question arises: what happens if the property is not let out? This situation is governed by Section 23 of the Income Tax Act. Under Section 23(2), a taxpayer can declare a maximum of 2 houses as self-occupied. The annual value of these 2 self-occupied houses is treated as nil, meaning no notional rent is added for them. Deemed let-out property explained. If a person owns more than 2 houses, then under Section 23(4), the third and subsequent properties are treated as deemed let out. This does not mean that the government imposes any penalty or levies 100% tax. It only means that potential rental income from such property is assumed, even if it is not actually rented out. This assumed income is called notional rent. Notional rent and deductions. This notional rent is calculated based on expected rental value, municipal valuation, fair rent, or standard rent, depending upon the circumstances. After this, municipal taxes are deducted, and under Section 24, a 30% standard deduction is allowed. If a housing loan is taken. For self-occupied property, interest deduction is generally limited to 2 lakhs rupees. For deemed let-out property, full interest deduction is allowed, subject to overall set of rules. Only the remaining amount after these deductions is treated as taxable income. Practical example. Let us understand with an example. If a person owns 4 houses and uses the first 2 houses for self-occupation, no income is considered for those 2 houses. Notional rent will be added for the 3rd and 4th houses. Suppose the estimated rent of the 3rd house is 2 lakhs rupees and that of the 4th house is 3 lakhs rupees. A total income of 5 lakhs rupee will be assumed. After deducting 30% standard deduction, approximately 3 lakhs 50,000 rupee will become taxable income. This amount will be added to the total income of the individual and taxed according to the applicable income tax slab. This clearly shows that it is not 100% tax. No limit on number of properties. It is also important to note that income tax law does not prescribe any limit on the number of properties. A person may own 1, 4, or even 10 properties. The law only provides that after 2 self-occupied properties, other properties will be treated as deemed let out for tax purposes. When income tax notice may arise. Income tax notice may arise only when there is mismatch between income and investment, or notional rent is not declared, or high-value property transactions are reported. This is a normal scrutiny process and has no connection with any new rule from 1st April 2026. No new rule from 1st April 2026. Therefore, it can be clearly stated that there is no rule from 1st April 2026 imposing 100% tax on owning 4 properties. This rule regarding deemed let-out property has existed for several years and is not a new provision. The actual position is only that after 2 self-occupied houses, deemed rental income from other houses becomes taxable and is taxed as per normal slab rates. Final advice. Therefore, if you own multiple properties, there is no need to panic. You should simply ensure that you correctly disclose income from house property in your income tax return and claim the available deductions. Thanks for watching this video. If you found it informative, please like, subscribe, and share your thoughts in the comments. Don't forget to hit the bell icon for more legal insights. I will meet you in the next video soon. Jai Hind. Jai Bharat.